Merchants from all over the continent met to trade their goods, but there was one problem. Hello and welcome back to OnlyPay. We'll be discussing about banking. I wish my bank account refilled as fast as my laundry basket. Just kidding. Today we'll be discussing of the evolution of banking sector and explained briefly. Be sure to watch to all the way to the end. The international banking system is an enigma. There are more than 30,000 different banks worldwide, and they hold unbelievable amount of assets. The top 10 banks alone account for roughly 25 trillion US dollars. Today banking seems very complex, but originally the idea was to make life simpler. 11th century, Italy was the center of European trading. Merchants from all over the continent met to trade their goods, but there was one problem. Too many currencies in circulation in paisa. Merchants had to deal with different types of coins and had to exchange their money constantly. This exchange business, which commonly took place outdoors benches, it were where we got the word bank. From the word banco, Italian they called as bench. The dangers of traveling counterfeit money and the difficulty of getting a loan got people thinking. It was time for a new business model. Home brokers started to give credit to businessmen. While Genoa's merchants developed cashless payments, network of banks spread all over Europe, handing out credit even to the Church of European kings. What about today? In a nutshell, banks are in the risk management business. This is simplified version of the way it works. People keep their money in banks and receive a small amount of interest. The bank takes this money and lends it out to much high interest rates. It's a calculated risk because some of lenders will default in their credit. This process is essential for our economic system because it provides resources for people to buy things like houses or for industries to expand their business and grow. So, banks take funds that are unused by savers and turn them into funds society can use to do stuff. Other sources of income for banks include accepting saving deposit, the credit card business, buying and selling currencies, and custodian business, and cash management system. The main problem the bank nowadays is that a lot of them have abandoned their traditional role as providers of long-time financial products in favor of short-time gains that carry much higher risk. During the financial boom, most major banks adopted financial constructs that were barely comprehensible and did their own trading in habit to make fast money, and their executives and trades millions of bonuses. This was nothing sort of gambling and damaged whole economies and societies like back in 2008 when banks like Lehman Brothers gave credit to basically anyone who wanted to buy a house and thereby put the bank in an extremely dangerous risk position. This led to the collapse of housing market in US and part of Europe, causing stock prices and plummet, which eventually led to the global banking crisis and one of the largest financial crises in history. Hundreds of billions of dollars just evaporated. Millions of people lost their jobs and lots of money. Most of the world's major banks had to pay billions in fine, and bankers became some of the least trusted professionals. The US government and the European Union had to put together huge bailout packages to purchase bad assets and stop the banks from going bankrupt. New regulations were put into force to govern the banking business. Compulsory bank emergency funds were enforced to absorb shocks in the event of another financial crisis. But other pieces of tough new legislations were successfully blocked by the banking lobby. Today, other models of providing financial are gaining ground fast, like new investment bank that charge a yearly fee and do not get commissions on sales, thus providing a motivation to act in the best interest of their clients. Or credit unions, cooperative initiatives that were established in the 19th century to circumvent credit shocks. In a nutshell, they provide the same financial service as banks but focused on share value rather than profit maximization. The self-proclaimed goal is to help members to create opportunities like starting small business, expanding farms, or building home families, while investing back in communities. They are controlled by their members, who also elect the board of directors dramatically. Worldwide credit union system was significantly ranged from a handful of members to organizations with several billion US dollars and hundreds of thousands of members. The focus on benefit for their members impact the risk credit unions are willing to take, which explains why credit unions, although also hurting, survived the last financial crisis way better than traditional banks. Not to forget the explosion of crowdfunding in recent years. Aside from making awesome video games possible, platforms arose that enable people to get loans from large groups of small investors. The bank as middleman, but it also worked for industries. Lots of new technology companies started out a Kickstarter or Indiegogo. The funding individual gets the satisfaction of being part of a bigger thing and can invest in ideas they believed in, while spreading the risk so widely that if the project fails, the damage is limited. And last but not the least, microcredits. Lots of very small loans mostly handed out developing countries that help people escape poverty. People who were previously unable to get access to the money they needed to start a business because they weren't deemed worth the time. Nowadays, the granting for microcredits has evolved into a multi-billion-dollar business. So banking might not be up your street, but the bank's role of providing funds to the people and businesses is crucial for our society and has to be done. Who will do it and how it will be done in the future is up for us to decide though. If you enjoyed this video, don't forget to hit like and subscribe, and be sure to turn on the bell notifications so you don't miss any videos just like this one. If you enjoyed this video, please give us your thoughts in the comment below and we'll see you in the next one. Thanks for watching.